Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Mark R., Andy S., Nick W., and Mike P. On the program today is a returning guest back to update. Mr. Jordan Trimble is on the program with us. Jordan is the president and CEO of Skyharbour Resources. The company is focused on uranium project advancement in Canada's Athabasca Basin through a dual strategy of in-house project advancement with its core projects at Moore Lake and Russell Lake, which include major partners Rio Tinto, Orano, and Denison. Skyharbour also has a prospect generator strategy where it holds an extensive collection of exploration projects that are being advanced by junior partner companies through various areas of the basin. Skyharbour Resources is listed on the Toronto Venture Exchange under the symbol SYH and also on the US OTC markets under the symbol SYHBF. Jordan, welcome back. How are you, sir?
I'm excellent. Good to be back. Looking forward to catching up.
Yeah, it's good to chat again, Jordan, and good to have you back for a few updates on company work that is actually progressing now. First, on the news front, at Russell Lake, the company is focused there on a drill program that is underway now. Talk about the objectives of this current program, the targets you are testing, and what your expectations are coming out of this, and also when the market can start to see some initial results.
Yeah, absolutely. So when we last spoke, we had just wrapped up our winter and spring drilling, announcing the results at Russell from that drill program in the summer months. And notably, we intersected a multi-percent up to 3% U308 intersection over a half a meter. That was within 2.5 meters of just under 0.8% U308 at this new target, the fork target. I think we went through the description and explanation of the significance of that new discovery when we last spoke. So I won't rehash that too much, but suffice to say, we're very excited with what we've seen there just a year and a half into working on this project. It's a big property. Over 73,000 hectares located and adjacent to Denison's Wheeler River project to the east of the Wheeler River project, and to the north of us, you've got the McArthur River mine. To the south, you've got the Key Lake Mill. The haulage road that services the mine runs right up through the Russell Lake project, and there's power lines as well that run through the project alongside the road, and we benefit with an exploration camp. So again, you can check off all these boxes, but what's intriguing about the project for us is given its sheer size, yes, there has been a fair bit of historical exploration and drilling, but again, very reconnaissance and exploratory in nature. So this project offers us and our shareholders a unique opportunity to go into a project that has lots of historical data and information, but not a lot of systematic drilling that would ultimately lead to vectoring in to a new discovery and deposit. So we think it's at the stage now where it's ripe for discovery. And this first hole drilled into the fork target earlier this year that intersected that multi-percent, relatively shallow too, about 340 meters depth, sandstone hosted as well, which is quite interesting. So this we think is, we've just scratched the surface to something larger. So this program that we've just announced, we've just commenced, will be following up on that high grade intercept. We're going to go back in there with a lot of new geological modeling. We carried out as well an ANT survey, a new geophysical technique that's been used quite effectively elsewhere in the Athabasca Basin, including by ISO Energy at their project up to the north. And we think we have a better handle on the geology, on the structures, the controlling features at this new target area. Keep in mind, again, and we would have discussed this in the previous interview, it's a bit of a trickier target given that it's below the power lines. It just so happens to be below these power lines that have historically interfered with the geophysics that had been carried out. So you don't have great EM picks or drill targets. It's interfered with a lot of the historical data. So you almost have to go back to the drawing board and go out and model it the old school way, and ultimately then garner your drill picks, which is what we've done. But this ANT survey has helped with that. We're getting, again, a much better handle on what's happening geologically, and with more drilling, we're going to garner more information. So this program, this phase of drilling, which will last us basically right through the end of the year into the new year with results to follow, will consist of about 4,500 meters. Again, a good chunk of that meterage will be focused at this Fork target. And then we do have plans to drill a few holes at some other targets as well on the project. And so this is going to be a significant potential catalyst for us going forward. Again, coming off the success that we had earlier in the year. And one final note too, with this drilling at Russell Lake, I talked about the infrastructure, the road, the power lines, the camp. Well, this is a huge benefit for us. Is it's allowed us to go in and drill at this project at a very low cost of drilling, about all in Canadian $300 a meter, which is about 40 to 50% less expensive than most of our exploration peers drilling at more remote projects in the Athabasca Basin. So we get a lot of bang for our buck drilling at this project. And so this is going to afford us the opportunity to continue advancing this project in 2025 and 2026 without having to raise a lot of money and having to spend a lot of money per meter advancing the project. One last final note, we've completed the initial 51% earn-in at the project, forming a joint venture with Rio Tinto as our project partner now. They own 49%. We have the 51% and the operatorship. So that's an important recent news headline from the company and milestone for us and our shareholders.
Jordan, thank you. And I was just going to ask you about that earn-in arrangement and the completion there for you guys to have the majority. Very good accomplishment and milestone on that front. Your highlight of the location is good too, just in the sense that also, if you guys start to turn up more here, that you're in a very good position from a location standpoint as well. Excited to see what you guys come up with over the next coming weeks, and of course into the new year with results coming out of this current program. So sounds very interesting, and I think folks should probably keep a pretty close eye on what you guys are doing here. With that, I want to just shift over for a moment and talk a little bit about Moore Lake. This is also an important project for the company. Any updates on further results coming out of that program that was launched, I believe, in late August?
So we've just wrapped up the drilling there. We started that program in September, a 2,500 meter drill program, following up on the results from earlier this year. Again, similar to what we carried out in the first half of the year, where we drilled at both Russell and Moore Lake, approximately 7,000 to 8,000 meters combined across both of these projects. Again, fall and into the new year. So the 2,500 meters was very successful. We obviously haven't reported any assays yet, where the assays and numbers are still pending, but very pleased with what we've seen. The focus for that drilling was resource expansion drilling. So there's several small high grade zones of uranium mineralization on what's called the Maverick Corridor. It's relatively shallow mineralization at about 250 to 280 meters vertical depth. The conductive corridor, the Maverick Corridor, extends for about 4.5 to 5 kilometers. Only about a half of that has been systematically drill tested, and most of the historical drilling has been focused on sandstone hosted or unconformity related mineralization. So there hasn't been a ton of drilling much deeper into the basement rocks, although we have carried out several drill programs, smaller drill programs in recent years, looking for feeder zones in the basement rocks, and we have had success, in particular at our Maverick East Zone, discovering new high-grade zones of mineralization in the basement rocks. But this program that we're just wrapping up was really designed to extend the high grade, the known high grade zones, add pounds there. And in particular, we've drilled a few holes along strike on that conductive corridor to the east, and very, very pleased with what we're seeing in that. And clearly this project, even though, it's had a fair bit of drilling, there is still very robust and strong exploration upside potential, as we're seeing with the drilling. This year, we've now completed about 4,500, almost 5,000 meters of drilling across 2 programs at Moore Lake. It's the first time that we've drilled at the project since 2021. Again, it continues to deliver. So we'll wait to get the final results back from the recently completed drilling. The drilling will now shift to the Russell Lake project, as we just discussed. And again, this is going to provide ample news flow and potential catalysts over the coming months for the company as we work our way into 2025. There's no question, though, that on the back of the success that we've had thus far this year with the drilling, and again, the high grade results that we announced at both Russell and Moore Lake, the highlight again from Moore Lake earlier this year was a hole that returned 7% U308 over 3 meters. So a very significant high grade intercept, and again, relatively shallow. These are results that need to be followed up on, and clearly with more drilling, we're going to be able to unlock more value at the project. And so the 7,000 to 8,000 meters that's underway, again, about a third of that at Moore Lake, 2/3 of that at Russell, and all the results and assays are still pending.
Looking forward to seeing those assay results come out, as well as with some of these follow-up programs, you guys tracking potentially a source of a larger deposit here. So as you well know, in this business, very rarely do you hit everything you need to hit with the first drill hole that gets put in. So I appreciate your guys' efforts to continue to investigate, and really appreciate the updates there with both Russell and also Moore. Lots of things happening here. The other thing I wanted to ask you about, the company has added some new personnel. Talk a little bit about those appointments, Jordan, on the exploration front, as well as the business development front as well.
Yeah, so this is just in the last few months, we've announced a couple of significant additions to the team, starting with a notable and well-respected geologist and geoscientist based out of Saskatoon, a gentleman by the name of Sardar Donmez, who coincidentally worked at Denison, again, one of our largest shareholders and a corporate strategic partner company of ours. Wheeler River, as we discussed, their flagship project where they're developing the Phoenix deposit into an ISR mine is just a few kilometers away from where we're drilling at Russell currently at the Fork Zone in the MZE zone. But Sardar was at Denison for over 17 years. He was there from the discovery of Phoenix and Griffin right through to the feasibility study at the project, which came out just a few years ago. So there's really no one better in my mind in terms of knowing that specific part of the Athabasca Basin, seeing a project through from discovery right through to feasibility study. And he was with a couple of other companies after leaving Denison a few years ago. And I think he very much liked what he was seeing at our Russell and Moore Lake projects. Again, knowing that specific part of the Athabasca Basin very, very well, having worked there for a significant chunk of part of his career. And so we were fortunate enough to have him join us in September. He's joined us as our VP of Exploration. He's going to be working directly with Dave Bayard, our head geologist, and with the rest of the team in Saskatoon. So a very, very meaningful and impactful addition to our team, and I think could be will play a key role in unlocking further value at both Russell and Moore Lake, as well as some of our other projects. It's interesting to note as well, during his time at Denison, he worked at a few other properties that Denison had in its portfolio, including South Dufferin, which is a project that we subsequently acquired from Denison just a couple of years ago, and just recently optioned to a new option partner company of ours. So he has a vast amount of information and knowledge on the Athabasca, and that's going to play a very, very significant role in Skyharbour delivering value for shareholders going forward. And then the second addition, a gentleman by the name of Brady Rack, who has joined us as a manager of business development at the company. He's going to be working with me here in Vancouver. He was a top producing broker at a firm here, previously called PI Financial, now Ventum. And he left the brokerage business this year and has joined us full time at Skyharbour to help with the capital markets part of the business. He has a huge network of investors in the Canadian capital markets. Known him for a very long time, good friend of his. And it's, again, I think a testament to the progress and the potential that this company offers, having both of these two guys join us here in the recent months.
Jordan, thank you for that, and good to see you guys adding key personnel as we go along here, as you guys continue to transition into, a company that has exploration going on, that has prospect generation going on, that has project development going on as well. So appreciate the thoughts on this, as well as the added folks and their expertise. Jordan, just with the junior partner work that's progressing, of course, on the prospect generator model for Skyharbour, you've successfully done a few deals recently. Congratulations first on those. Talk about some of the new partner deals that have been done with Hatchet and Mustang, as well as some of the existing work that partners are progressing. We've seen some progress in news from Terra Clean Energy, as well as North Shore. Just talk about some of the new deals, plus also some of the existing partner recent news.
Sure. So, as a part of our prospect generator business, and with interest in over 1.4 million acres of uranium mineral tenure in northern Saskatchewan across 29 projects, this has become an increasingly more important part of our business, bringing in these partner companies, farming out or optioning out secondary and tertiary properties in the portfolio, helps us again, keep the equity dilution in check, as well as, more importantly, I think, provide our shareholders with multiple irons in the fire, opportunities to get some exposure to new discoveries and exploration success across numerous projects without us having to, go and raise the money to fund all the work. So we now have, and this has been a very busy part of our company over the last handful of months here, given that we've added 3 new partners in the last several months. So we now have 10 partner companies advancing 14 of our 29 projects. 3 of those are joint venture partners, one of which with France's largest nuclear fuel cycle company, Uranium, which we've talked about in the past, and there'll be announcements out on the final results from this 2024 program, where they conducted a fairly substantial geophysical and ground field program. And we're still waiting on final results from the last part of that, and we are expecting a notable budget going into 2025. So that's quite exciting for us. And then we've got our JV with Azincourt at the East Preston project. They completed a little bit of work earlier this year, some drilling, and we're waiting to see what the plans are for 2025. At our Hook Lake project, ASX listed Thunderbird Resources is now a joint venture partner of ours there. Again, we'll wait to get some guidance on what 2025 could bring in terms of any exploration and work. We are expecting some work there next year from them. And then the now 7 earn and option partners that are still actively earning in at various other projects in our portfolio. I won't go through every one of them in too much detail, but the recent 3 that we've just announced are a couple months ago. We announced a fairly significant transaction with a currently private entity called UraX, run by a very capable management group out of Toronto. well-known mining group that's come in to build this company up, and we've optioned to them 2 projects, one of which I've talked about here previously, South Dufferin, which was a project that we acquired from Denison just a couple of years ago with the intent to find a partner company to come in and advance it. We've now done that. South Dufferin is a very exciting project that I think has incredible discovery potential. It's on trend to fairly large, high-grade deposit that Cameco owns. It's right in the south central part of the Athabasca Basin, and consists of relatively shallow targets. There's a conductive corridor, fertile corridor that again is host to that Centennial deposit that Cameco owns just to the north of South Dufferin. And the project's had some historical drilling and work, but it definitely warrants some further work, as there has been uranium showings and mineralization in previous sampling and drilling. And so this is going to be the opportunity now for a company to kind of come in and really run with the project. And so we optioned that project along with one of our other projects called the Bolt project, which is a little bit further over to the east of South Dufferin, closer towards the Key Lake Mill. It's close to regional infrastructure, so relatively easy to work on. And that option agreement is a staged earn-in, whereby initially URX can earn a 51% interest for total combined project consideration of about $4.8 million. Again, that consists of cash and share payments as well as exploration funding. And then they do have an option to acquire 100% of the project through total combined project consideration of about $9.8 million. So great deal for both companies. We're very much looking forward to them getting to work on that project. And they do have plans for an initial drill program early in the new year. They're gearing up for that. So you will see some news flow on that here, I would think within the next month or two, and plans to go public as well. Shortly following that, we announced a project deal with a company, again, a private company called Hatchet Uranium that, again, has a very capable, well-known management group behind it, Jim Paterson being the CEO, who I've known for a very long time. And they're coming in to option into one of our projects, the Highway project, as well as acquire several other projects that are located up in the northeastern part of the Athabasca Basin. In return, we will own 9.9% of the company, and the earn-in option for the Highway project consists of several $1 million in cash, stock payments, as well as exploration funding coming from Hatchet. And then finally, just in the last week here, we announced our 10th option agreement with a company called Mustang Energy. They're a listed publicly traded company, and this option deal is for one of our earlier stage exploration properties, the 914 West project in the southeastern part of the basin, which again consists of cash and share payments over several years. They can earn up to 75% of the project by funding the exploration as well over those few years. So a lot to cover when we talk about the prospect generator business, but just to summarize it all currently, we've got 10 partner companies now, 3 of which are joint ventures. These 10 partner companies, assuming they all complete their respective earn-ins at these projects, that would represent over $90 million in combined project consideration coming in. So that's cash and share payments coming into Skyharbour directly from these companies, as well as exploration funding from these partner companies during those earn-ins. Usually they're 3 to 5 year earn-in periods. These companies are required to fund 100% of those exploration requirements and expenditures until there is a joint venture formed, assuming that we retain a minority interest in the project. And typically, we do keep an NSR on most of these projects. We try to retain as much equity and a large shareholding in these companies. That allows us to provide our shareholders with some exposure to these partner companies, right? So owning shares in Skyharbour, it's not just getting exposure to the project through our minority interest ultimately in it, but also there is some exposure directly to the equity of these partner companies, given that we try to maintain our shareholdings in these various partner companies as they advance these projects. So we still have, of the 29 projects, we're obviously working and active on 2 of them currently, Russell and Moore. 14 have been either optioned or JV'd out or sold. So that leaves us with quite a bit in inventory still that we can look to option or JV out, and we're in active negotiations on a few of those other properties to bring in additional new partners.
Lots of stuff happening here, lots of things to follow, and looking forward to more results and more updates coming out of all these junior partner programs in 2025. Jordan, before we wrap up here, any comments on the uranium market and events recently that have stood out to you and how you see 2025 kicking off for the sector?
Well, yeah, look, there's been a lot that's happened in the last few months, a number of pretty notable headlines. I think that obviously the big tech and hyperscaler announcements over the last several months have really kind of caught people's attention. But again, there's this underlying major supply deficit that is, I think, going to be the key driver and catalyst for higher uranium prices. And one of the things that we've seen in recent weeks and months is some significant guidance downgrades and production misses from a number of the up and coming producers. We saw obviously with Paladin in the last couple weeks here. We've seen a couple of the U.S. producers lower guidance as well, Peninsula. So I think one of the things that's going to catch the market off guard a little bit, maybe isn't being priced in as much as it could be, is the simple fact that developing and producing uranium is not easy. When you see the 2 largest producers like Kazatomprom and Cameco over the last several years announce pretty significant production guidance downgrades or misses, right? And that just goes to show you that even the top operators can struggle to meet those those production numbers. And so with new producers coming on, I think the market may be overestimating the timing, at least, of all of this production and supply that could be coming on. But I think it's also important to emphasize that even with some of this new production and supply coming on, it still really is just, especially in the next few years, a drop in the bucket, right? I mean, the bottom line is you've got 200 million pounds of annual uranium demand, and that's now growing at a fairly steady clip of over 3% a year, which, I mean, that number continues to grow on an annual basis. And now with the advent of these data center requirements and the AI requirements that I think will be a massive new source of potential demand going forward. And the supply side, we're only producing about 150 to 160 million pounds primary mine supply a year. The next 3 to 4 years, there really just isn't a lot of new production that's coming online that can meet that supply gap. And again, we've up until fairly recently, there's always been an abundance of secondary supply. There's been downblending of weapons. There's been above ground inventory, stockpiles, underfeeding, right? So you've had a plug for this primary mine supply deficit. And we are now out of this age of abundant secondary supply. And when you have mobile secondary supplies dwindling as much as they have, this is the perfect setting now for a market that is not balanced, whereby you're going to see continued upward pressure on the price. Yes, we have seen volatility with the uranium market, with the price in 2024. Obviously, earlier this year, we saw the spot price spike up to well over $100 a pound. It's basically settled back in the low 80s. But I think one of the key takeaways here is that we've seen a new base built at around 75 to $85 a pound, right? And so this is the new base going forward. And the next leg up, which I think is going to come fairly soon, is going to be, I think, a very exciting time for investors, given where we're trading at currently and the price action that we've seen over the last handful of years. And if you look at, for example, the enrichment and conversion prices over the last basically 3 years, I mean, these charts have basically gone parabolic. I mean, they're up hundreds of percent just in the recent few years, right? So when you have, yes, the uranium price has been trading higher over the last 3 or 4 years, but really pales in comparison when you look at the charts of conversion and enrichment prices and markets. So I think that's a good omen as to what's to come for the U3O8 market. You know, on the demand side, again, these recent headlines, whether it's, you know, Microsoft with 3 Mile Island, I mean, you know, what an announcement that was, to have one of the largest tech companies in the world basically announced that they would be restarting the 3 Mile Island reactor. You know, of all the reactors to restart, you know, I think it's quite quite significant that they've chosen to go with 3 Mile Island. And they've announced that they'll be funding 20-year power purchase agreement for at least $100 a megawatt hour, nearly double the wholesale cost of electricity there. So, I mean, that just shows this commitment from big tech. And, you know, unlike dealing with governments and utilities, these big tech companies, these buyers need electricity, need a lot of electricity now, and they're willing to pay up for it. So, you know, I've seen other announcements from Amazon, you know, from Google, you know, the list goes on, right? And so I think as this new source of demand really kind of comes into the market, I don't think you've yet seen it obviously have a major impact on the actual uranium price, on the nuclear fuel prices. But I think it's, you know, the next few years, you're going to see that work its way into the market, and it's going to be a big driver for higher prices, nuclear fuel prices going forward. And again, you know, we talked about the supply side. There's, you know, hasn't been easy getting new supply online, whether that's with the biggest producer in Kazatomprom, or with some of the smaller near-term producers in Australia and the United States and in Africa. So I think this is just going to all lead to continued upward pressure on the uranium price. And needless to say, the uranium equities, the stocks, which still combine for, you know, less than a $70 billion combined global market cap of all publicly traded uranium companies out there. You know, this is the perfect setting for a very, very thrilling few years ahead for investors in the space.
Jordan, thank you for that. Lots of good additional information here, and hope the audience listened into some of your comments, and very much looking forward to the years ahead here as well. And I think we'll find some different routes to get to where we need to go, and some delays and some choppiness and some market events that will probably appear negative initially, but then turn out to be positive. We're in that stretch of very positive news for the sector, as you highlighted there, and I think there's many years yet to come on that front. So Jordan, well, let's leave it there for now. For potential investors listening in, the company has a market capitalization of about 85 million Canadian dollars today. Why should Skyharbour Resources be considered within the institutional, family office, and retail investors portfolio going into 2025?
We're one of only a few remaining pure play advanced stage exploration companies in the Athabasca Basin. By advanced stage exploration, I mean companies that have a market cap greater than 50 million, but less than 500 million. So that, you know, there's in most other commodities, there's dozens of companies that would fall in that, call it, range or bucket of companies. We're one of only several. And a part of the reason for that is there's been a fair bit of M&A, at least the early days of the M&A ramping up in the space. And so, that's left us in a very unique position with very few other companies, again, that are pure play advanced stage exploration companies with a focus in the Athabasca Basin. We're really building Skyharbour up to be a one-stop shop for investors to get exposure to high grade exploration and discovery potential. I don't need to reiterate the success that some of these other exploration companies have had, discovery stories have had in recent decades. I mean, these are very, very high value, rich uranium deposits. That's a great thing with the Athabasca Basin being the highest grade depository of uranium in the world. So when you find something, these are the return potential is massive, as we've seen with the likes of NextGen, Fission, ISO, Hathor. The list goes on over the last 20 years, and we're looking to emulate that success. So we offer investors exposure to potential new discoveries, not just at our two core projects, which in Russell and Moore, as we discussed earlier in the interview, are very strategic assets given their location. There's high grade mineralization now, both projects that we're looking to expand on. But you also get exposure to now 10 partner companies, most of which are going to be actively advancing and exploring and drilling at these secondary and tertiary projects of ours that they've either earned in on or they're currently earning in on. And so it's a very unique hybrid model. There's a significant amount of optionality value as well. And so if you're looking again for that one-stop shop, it's worth taking a look at Skyharbour. We're also coming into a very, very catalyst-rich time of year for us as we enter into the winter season in 2025. We're planning to carry out a fair bit more drilling next year at Russell and Moore. And as we continue to advance those projects, as well as these other partner companies carrying out their winter programs. So it's definitely worth taking a look at the company. It trades on the TSX Venture under the symbol SYH. We also have an OTCQX listing as well, SYHBF.
What's the best way for folks to reach out to the company?
Simply go online. All of our contact information is on the website. It's skyharbourltd.com. You'll have my information there, as well as our investor relation manager, Nick Kultura. So feel free to reach out whenever you like.
Jordan, great update. Really appreciate it. Best of luck here as we wrap up the year, and looking forward to speaking with you again soon.
Thank you.